Yeah, so like you guys can see on the screen right now, that's the Instagram page, official Instagram page for HFX. If you want to follow it, going to be posting there on a daily basis. Just post like you've seen so far, just nuggets, information, value. So I'm going to be posting content there every day. If you guys want to go follow that, that's the official Instagram page. Was created a few days ago. Probably in the next 2 weeks, I'm going to be doing some giveaways on this page, so stay tuned. Make sure you follow it. Everything is good. Music's too loud. Yeah, I turned the music down. Should be good now. So Sundays we do trainings. I don't like to trade on Sundays. I don't focus on the market much on Sundays. So Sunday's training day. Sunday's the day we really just go over information. A lot of times, let's click on this real quick. So if you ever come on Sundays, I don't like to trade on Sundays. I never trade on Sundays, so that's why we do training on Sundays. For me, Sunday's not the best day to trade personally. For me, I don't like trading Sundays. You don't need to trade every day either. I like to trade Tuesday, Wednesday, Thursday. Those are the main days I like to trade in the market. Sundays, though, no, not for me. So Sunday's just another day for me, really, just another normal day where I kind of get ready for the week, get myself ready mentally, physically. Sunday's still just kind of like another day. But yeah, training session today. Training is for Sundays. Again, I don't trade on these sessions, just go over information. And today we got some good information to go over. We went over this last Sunday, so this is going to be another lesson. Yesterday, I did a 3-hour training. Maybe some of you guys were there yesterday. I don't trade Sundays. Again, look at the schedule. Sundays, that's why Sundays I'm on Sundays. I don't trade Sundays, so trading sessions are on the schedule. If you're looking for trading sessions or trade ideas, that's on the schedule. So no trades today, guys. That's why I do these trainings on Sundays. No point in trading on Sundays. Sundays kind of suck to trade, to be honest. But anyways, yesterday did a 3-hour basic training. Basic for new traders. If you have experience, you don't really need to watch that. I'm going to do the same thing next Saturday, same time. So yesterday I did a 3-hour basic training. I'm going to do the same thing next Saturday, all the way until the end of June. So until the end of June, I'll be doing some basic lessons for new traders on Saturdays. Did that yesterday. That was a 3-hour one, and they're going to be pretty long. They'll be like 2-3 hours, 2-3 hour lessons. Yesterday was 3 hours. So anyways, let's get into it. We're going to go over this today. Yeah, so if you missed yesterday's is 3 hours. It'd be a pretty long recording to watch. Just try to join the one I'm going to do at the end of this week. So I'm going to do it every Saturday until June at 12 p.m. Eastern time. This Saturday. So this Saturday, 12 p.m. Eastern time, I'm going to be doing another one. It'll be pretty much just as long. So the basic training is going to be it's going to be Saturday, 12 p.m. Eastern time. Till the end of June. All right. Then it'll just be done on Go Live. So that's like basics, very basic, new traders. Some of you guys, or a lot of you guys, don't need to go on that session. It's just straight basics, new beginner traders type of lessons. Like what is a broker, this and that, what is an entry point, what is buy, what is sell, call, put, all that type of stuff. So some of you guys are way past that. So I wouldn't say it's necessary for everyone. It's just anyone who's new. All right, so we're going to go over time and price training today for the next 45 minutes. We're just going to dig right into this. I'll look at the chat at the end of the session. I just want to go through all the information real quick. So time and price, I'm going to show you guys how, and I went over this a bit last weekend, and I've talked about it a few times on my sessions, how time is very relevant in the market. Time on the clock. So this is what we're going to look at tonight. I'm going to show you how time can be very, very relevant in the market. So this is a time and price training. If you come on my sessions a lot, you've definitely heard me talk about this, but this might be new to a lot of you. So, and when you talk about time, what I'm really referring to is times of the day, hours. We call this the market timing strategy. So we call this the market timing strategy, the top of the hour strategy. Now again, this lesson is going to show you guys how time is very, very relevant in the market, and how the market has this unique behavior around certain times, or not just certain times, but specifically we're talking about hours. We're specifically talking about hours in this lesson when we say time. So when I say hours, I mean like 7 o'clock, 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock, all your hours, right? Those hours can be really relevant in the market, and the type of behavior that the market will make around the hour. Especially with my strategy and the way I trade, we can combine this with my strategy, with a few strategies, and we can combine this with indicator strategies. Well, this is just I'm going to go over for the next 10 minutes here, just some information about it, talk about it, and then we're going to go through these slides. So as a trader, right, we all know timing is important. So this strategy is going to allow us to really get a little bit more accurate on where we put ourselves in the market. It's going to give us the ability to also anticipate movement better, anticipate movement, like when movement's going to happen. A lot of times certain movement can happen around hours. Certain movement tends to happen a lot around the hour points. So like I said, when I say hours, I mean like 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock, right? It was 16 minutes ago, it was 7 o'clock, so we just hit a new hour. In about 45 minutes, it's going to be 8 o'clock, and then 9 o'clock, and then 10 o'clock. All these hours are good places to position yourself. Once you understand some things about the market, some strategies, some indicators, hours can be really good places to position yourselves for trade setups or for opportunities. And there are many hours in the day, right? There's many hours in the day which can give us many opportunities. So I'd like to say not every single hour is going to be, it's not specific with which hour this concept happens at. But you're going to see it occurs very, very frequently. It's not specific like which hours does it happen at the most. I wouldn't say there's hours that it happens at the most. I would just say, between all the hours that there are, it's very, very consistent and very, very frequent. You'll see a lot of these occurrences. And I have a little picture there that I just drew, kind of like a little diagram that can help understand this a little bit more, what we're going to be kind of going into and looking at on the chart. So we're mainly we're focusing on the time, right, with the hour marks. So this is just an example. I wrote 9 a.m. 9 a.m. is not specific. It could be 8 a.m., 10 a.m., 11, 12, 1, 2, 3. It could be any hour. I just wrote 9 there. But anyway, a lot of times when the market is going one direction, before we hit that hour mark, when we come into that hour, we tend to see these shifts. We tend to see momentum shift for a short period of time. And this is on our smaller time frame charts, like our 15-minute, our 5-minute chart, and maybe even our 3-minute chart. These are on smaller minute time frame charts. So a lot of times when we look at it, when we really study this, a lot of times coming into an hour, the market can be going one way. A lot of times you'll see this, and then it can make that shift closer to the hour, or start to make that shift on the hour, or a little bit past the hour, we see that market make a shift. And this is kind of a little diagram here of what we're going to see kind of on the charts. So when you look at your trades, or when you have setups, and if you know my strategy, this is really going to help. For those of you guys who might be a little bit more advanced, remember, some of you guys are new, I understand. And it's just a little bit more time to catch up on some things and understand what everybody else does, because some people have been here for months. So those of you guys who are at a certain level of trading, who maybe have been on a lot of my webinars or have been here for a while, watched my videos, knowing this can help with the strategy that I use, with the indicators that I use, the confirmations that I look for. We're not going over that tonight. We're just going to stick to this. We're just going to stick to this for the next 40, 50 minutes until 8 o'clock. So let's move forward. We're basically gonna look at this on the chart and on some examples here. We're gonna be looking at this on the chart and see if it's relevant, if it happens. So let's go to the next slide, and this is example number 1. This is just one example. We're gonna be looking at a lot of examples, but for the first example, I just show them one simple example here. This is AUD/USD on a 15-minute chart. So each one of these candlesticks represents 15 minutes from when it opened to when it closed and the next one opened. So every candle is a 15-minute candle. If you look at the bottom of the chart, right, you can see the times. You can see 12 o'clock, 12:30, 1 o'clock, right? 13 would be 1 o'clock. Even before 12, you can see 11 o'clock, you can see 10 o'clock, you can see 9 o'clock. So what we're going to be paying attention to is the direction. We want to see the market going one direction coming into that hour. So we want to see the market going down, or we want to see the market going up. That's what we're going to be paying attention to. We're going to be paying attention to, what direction is the market going in before that hour. And we're going to look at what happens to the market coming into that hour. Does the market change direction in that hour? If you look at this is just one example of the many we're going to look at. And we're going to look at all the examples on the same chart. We're going to look at all the examples actually on this same chart here. I'll show you what I mean by that. But you can see we have 12 p.m. marked here. 12 p.m. hour mark. You can see I marked 12 p.m. with a black line here. This was last week. This was at the end of last week. This was, I think Thursday or Friday on the 5th. Look at what the market does at 12 o'clock or even after 12 o'clock, right? You can see how coming prior to 12 o'clock, the market was going up, was going up, was going up, and was going up. What happens at 12 o'clock? We start to see the momentum shift. And we start to head the other way. This is the concept we're going to look at on all the next slides. I'm going to show you guys lots of examples, and this is something you can study. But this is kind of like the first lesson of understanding how time can be an important factor in the market. Because remember, you have hours, you have half hours, you have quarter hours, right? Like we have hours like 12 o'clock, but we also have 12:30, 1 o'clock, 1:30. So we also have half hours, right? Hours aren't the only thing that is relevant in the market. There's also half hours. But for tonight's lesson, I'm mainly just going to be sticking to the hour marks. Those are pretty consistent and pretty structured when you look at it. Now, when we think about hours, when we think about how humans make decisions, right? Here's some psychology on this. Humans make decisions, right? A lot of decisions that are made are coordinated to hours, right? You might say, oh, if you're gonna go meet up with a friend, you might say, oh, meet me here at 7 o'clock. Or, if you have to go to work, you might start work at 9 o'clock. Or you might finish work at 10 o'clock. Or you might have to go somewhere at this hour. Or a lot of times when humans make decisions, they're organized in a sense as to what time those decisions can be made at or what time we arrive at, right? If that makes sense. Humans make decisions at hours, right? And the hours can be points where things arrive at, where a decision could be arrived at, in a sense. That's some psychology on this. So why this happens, this is why this happens, because banks, institutions, hedge funds, companies, they're very organized in when they might make their decisions, when the market might move, right? That's kind of just some psychology on this for those of you who might understand what I'm saying there. But again, side notes here. I posted this. This is already posted in the HFX Pip Talk channel. If you go to Pip Talk, so if we go to I'm Center, log in, Pip Talk, and I think it's on page 4. Yeah, it's page 4. Right here, HFX. So this file, I already posted it last week. Where was it? Right here, I wrote time and price PDF. That was 3 days ago. And, yep. So if you just click on that, it will download in the same one that I have. Will show. If I zoom out, let me see. Can I zoom out? This thing is zoomed in like crazy. See if I can zoom out a bit. Yeah, there we go. There it is. It's the same PDF I'm going through right now as in the Pip Talk channel. So again, one more, just real quick, 12 o'clock. I could have marked any hour, 9 o'clock, 10 o'clock, 11 o'clock. The next slides are going to show that. The next slides are going to show the same chart, but every single hour is marked. So we're going to look at this chart in the next few slides, and every single hour is going to be marked. And we're going to see, does something like this occur often? Because that's what we want to study, and that's the type of stuff we want to go for as traders, is things that occur often like this that maybe not is looked at by everyone, right? So we're going to look, again, 12 o'clock. You can see how the market is going up, and at that hour, it starts to go down. So next slide is going to be the same chart. Next slide is the same exact chart. It's just 4 hours later. So it's the exact same chart, but 4 hours later in the day. So you can see this one down here at 12 o'clock. The next one, I have 2 examples on the next one. 2 examples of this on the next one. And you can see the same 12 p.m. one that I have marked from the first chart. And you can see another example on the exact same chart. So it's very similar to the first example. In the first example, we see the market going up, going up, going up, coming into the hour. So coming into that hour, the market's going up. Past that hour, you can see how we really change direction. Same thing here. You can see how the market's going up more, going up, coming into that hour, right? The direction of the market is more up. After that hour, look how the market extremely changes its direction. So that was at 15. That was a couple hours later. That would have been at like 3 o'clock in the afternoon. It can be any hour. Remember what I said, any hour. This is just something that the market does. It's a behavior. It's not a holy grail system. It doesn't happen every hour of the day. It's just a very, very repetitive nature to the market. It happens every single day. And if you trade at hours, right, this is why I like to trade a couple times a day. Because I understand the market sets up a lot of times at hours. So a lot of times I'll be taking trades in the first couple minutes sometimes when I first start trading, because the hour can be where you're getting that setup. So I like to personally trade a few different hours per day, understanding this concept. I like to trade a few different hours in the day. I like to trade 3 different hours in the day, right? In the morning, in the night, and then late at night. I like to trade 3 different hours in the day because of this concept too, because a lot of times really good setups or really good movement can form around the hour mark. Around the hour mark, that's where you get a lot of good trade setups. So again, this chart just shows 2 examples of this concept. Again, as we go forward, the next chart is going to show every other hour marked. But yeah, so far I hope everybody understands this concept. Yeah, you can analyze it on a 15-minute, and you can use a 5-minute to kind of more of an execution. Like, it's kind of mixing and matching both. Same thing we do with kind of like the 5 and the 3. We do it more the 15 and 5. So you can use the 15-minute and the 5-minute for more as like an execution. 15-minute more for the setup, more for the analysis. So the next slide you see has a lot of lines on it. So this slide, it's going to be the same chart, but every hour is going to be marked now. And I think the next one goes a little bit forward. It's a few hours later. So next chart has every single hour point marked. And now there's a lot of lines. It looks kind of clustered, so it is kind of weird to see, but let's look at what happens at every hour. Let's see if the market relatively makes a shift. That's really what we're looking for. We're looking to see if coming into the hour, the market's going a different direction, or we're just relatively mainly looking to see, do we get a shift in that hour, right? Right? The market doesn't have to be going down so much before, right? It could be a couple candlesticks. It could be a little bit of movement. Just understand, a lot of times at that hour mark, you get those shifts, whether this is 10 o'clock, right? Maybe it's 10 a.m., whatever hour it is, 9 or 8. A lot of times that hour is going to give you that shift in price. So some things might look better than others. Some things might not be as clear, and that's normal. We're just focusing on time and what price does after that time or before that time. So if you look at the bottom of the chart, you can see the whole day is marked now. Not just picking out 1 or 2 hours. Now the whole entire day is marked. We have 11 o'clock. We have 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock, 4, 5, 6, 7, 8, 9, 10, 11, all the way up to 12 o'clock marked. So we have like half a day here marked on the chart. So same concept. We're going to look at, again, what I just said, what the market's doing before the hour, how that hour impacts price's direction. Does the price change on that hour or after that hour? So 11 o'clock. And then we're going to look at this same chart, because right now we're looking at a 15-minute chart. We're going to look at this same chart on a 5-minute. After this, we're going to look at this same chart on a smaller time frame. Now let's look at 11 o'clock, for instance. 11 o'clock is marked exactly at the hour, right? Every line's marked exactly at the hour, okay? Before 11 o'clock, was the market going down or was it going up? I didn't really go a little, I should have went to the left a little bit more because I can't really tell here. But like prior to, you can see overall the market wasn't going up. It was going down, and you can see how the momentum shifts around that hour. Not the best example, but we have lots of examples here. That's why I did a whole day here. So we have lots and lots of different examples. But again, now the market's going up in that hour. Notice how the 11 o'clock hour was bullish. From 11 o'clock to 12 o'clock, the market went up. As we get to 12 o'clock, look what the market does. From 12 o'clock all the way down to 1 o'clock, what did the market do? It went down. So you could see from 12 o'clock how we made a shift in price. When I say shift, what I mean by shift is like change in direction, right? Where you can see coming into 12, the market was going up. After 12, going down. And then from 12, down, 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 down. We're approaching 1 o'clock here, right? 1 o'clock is that black line. From 12 o'clock to 1 o'clock, the market was going down. And you can see how after 1 o'clock here, the market starts to make that shift. Right, we have this big candle come down. Next candle starts to go up, up, right? See that shift here, right? That change. Time is very relevant, right? Like I said at the beginning, this lesson's supposed to just teach you how time is relevant, and it's only going to go till 8 o'clock. So it's like, you guys, if you need to rewatch this, it's a quick lesson. You can come back and rewatch, right? This lesson is not supposed to be like, how do we enter or what in that. It's just supposed to show you how time is super relevant in the market. And this is where we can get some good opportunities, some good trades. That's the main purpose of this lesson. Okay, it's not going to let me draw it, but see that shift, right, on the hour. I don't know why this thing's being weird. Oh. Yeah, that thing's weird. Let's not use that. And then from 1 o'clock, so from this hour to the next hour, the market went up. Did it go down at that hour? Nope. So this hour, it didn't go down. It's not supposed to go down every hour. Like I said, there's no specific hour. You don't want to think there's a specific hour. It's supposed to work like magic every single hour, right? This is an hour here. Nothing happened at that hour. The market stayed bullish, right? It continued. So nothing there. We can see from 1 o'clock to 2 o'clock, nothing happened. But from 2 o'clock to 3 o'clock, we continued. And the same thing, right? We can see how the market makes that shift going into the hour. And then from there, continues down, 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 down. Again, another hour where we don't see the market shift, which is fine. It's not supposed to. We're not supposed to see every single example here, right? Nothing happened on this hour. You can see the market continues bullish, but the next hour, look at the price behavior. Look at, out of all these candles here, out of all these candles from the top to right here, I'm going to mark it red. Out of all those candlesticks right there with that red line that I marked, all those candles, when does the market actually make its shift in price? Coming near that hour. Out of all those bearish candlesticks from this hour down to the next hour, nothing. But the next hour, you see that market make the shift. So if we keep looking another hour to another hour, again, we'll look at every hour. Here to here. Look at what the price does. Prior to, it's kind of going down. Then that hour goes up. And look at how the next hour reacts right here. So look at how these hours, look at how the price is shifting its momentum a lot of times at some hours. Not every hour, and again, it's not supposed to happen every single hour. But very, very relevant, consistent behavior with price. Look at this hour over here. So, I mean, from 19 to 20, market continued down. 21, look at this hour, which is 9 o'clock. Look at what 9 o'clock does. All these candles going down, 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 down. Look at how the market shifts all the way up. So this is something to pay attention to. This is something to study. This is one way I get a lot of good trades. A lot of the trades I take can happen in the first bit of a session, or waiting for the next hour. If I'm trading and I don't see anything for 30, 40 minutes, I'll usually wait for the next hour to see if something's setting up coming around that hour. Because a lot of times that's where you can see setups form. Not only hours, like I said kind of earlier, a little bit ago, I said half hours. Hours aren't the only relevant thing. There's also half hours. There's quarter hours. There's other things that are relevant with time in the market. But this is kind of just probably an introduction, I would say, for most people. And again, this is recorded, so this session you can always come back to and rewatch. I'm not going to make it too long. I don't want to make this session too long, because you guys can always come back and rewatch it, and you have the PDF. So not every hour, like you can see this hour. I mean, if we look at 21 to 22, 21, like look at how price shifted at 21 all the way to 22. It's going up. It went down a little bit. You can see not too much. It kind of stayed up there, and then the next hour prices moved. See that? See how that next hour price really moved down? I mean, we don't need that movement in binaries, but all you really need is a little bit of movement. You just need that first bit, right? So taking your trade at an hour point can be relevant. Taking it, like taking your trade. This training has, like I said, this is just an introduction, but taking your trades at certain times can be part of a strategy. Like, I'm going to take my trade at 7 o'clock or 1 minute before the hour. Like, taking your trades before the hour or at the hour. That's what this can kind of show you, is where you could take that buy. If you took it at the hour, right? Hours are places, are times we could be taking our trades as well, right? Not that we need huge movement, but it's like usually the beginning of the hour, that first 10 to 15 minutes can start to shift. So let me know, can you guys see this? I hope you guys can see this. Any currency pair, I mean. Any currency pair, I would say. Not I wouldn't say there's a best currency pair for this. No. There's definitely not a best currency pair for this. Every currency pair would generally do something like, every currency pair would do this. I wouldn't say there's one that's going to do this better than the other. Same thing with, like, is there times that it happens at? That's something I would study, like times it might happen. What times do I like to trade? So I'm just going to answer a quick question I see in the chat. I'll answer a few at the end just so we can save time for the training. Which times do I like to trade? So I like to trade 2 to 3 times a day. Right, like I generally like to go to the market 3 times a day. 3 different hours, right? 3 different hours. And this strategy is kind of one reason why. Another reason why, I'll say it real quick, that I like to go to the market 3 times a day is just because, think about this. If I went to the market 1 time per day, I'm really limiting myself to how many good trade setups I can see. If I only traded once a day, that means I might only trade 4 times a week. I might, So that would limit me to, how many good setups I could see. I don't go to the market 3 times a day so I can take as many trades as possible. That's not why I like to go to the market 3 times a day. I like to go to it because those 3 times I'm trying to really critique how good the market condition is, what type of market environment I'm in. It's not because I'm trying to take as many trades as possible. It's like once you have enough experience, you can really critique things and see, what type of environment you're in, what type of market condition you're in, and really see if it's worth taking a trade. Or you got to identify your strengths and weaknesses too. And that's one reason too. I like to go to the market 3 times a day because what if it's just not the right market for me? What if I like to go 10 a.m. So my 3 favorite times are 10 a.m. These will be my 3 favorite times to trade or go to the market. I say go to the market because it's like I don't have to trade every single time, right? I don't have to trade every single time I go to the market. What if I go to the market at 10 o'clock in the morning and, it's just not the market for me. It's just, a market that I'm not comfortable trading in. It's a market that doesn't look good to me. It's a market that, I'm not willing to risk my capital in. Maybe I don't feel good. Maybe my psychology's off. Maybe I'm not seeing stuff right. Maybe I'm just not on point. Maybe my head's just not in the game. It could be any reason, right? It's just, what if that market's just not for me? When you have experience, you can critique that. That comes, but not every trader does that. And that's why I have discipline, and you need discipline in these markets. That's why I like to go to the market 3 times a day, right? What if I trade in the morning? It's just not for me. What if I don't like it? What if I don't see anything good? What if it's like, this just doesn't look good? Why are we gonna trade in this? I can come back later and see if the 8 p.m. market's looking good, or if the 1 a.m. market's looking good, right? Or what if I have a really good morning? What if 10 a.m. I have an amazing morning? I don't have to trade 8 p.m. or I don't what if the first session's just really good? So it's like you'll hear them say trading is 10% psychology, or sorry, opposite. You'll hear them say, trading is 10 to 20% skill, or about the charts, about your strategy and indicators and use stuff like that. It's 80% psychology. And it's true, it is. It actually is. Yeah, those are my 3 favorite times, I would say. Because setups can look different at different times. Coming into that hour, that's why I like to trade 3 times too, because I can use that hour too. So 10 a.m. 8 p.m., and 1 a.m. I'm on the chart before the hour, right? I'm on the chart for the hour. So 5, 10, 15 minutes beforehand, I'm on the chart seeing if maybe something's setting up. So my setup could be right at that hour, right? Or if I don't see much in the hour, it could be at the next hour. I could find a setup coming into the next hour. Or I could find a setup coming into this next hour, or coming into this next hour. It's only 1 hour. That's not a long time, right? So the setup might not be in the first hour. It could be in the second hour, or it could be in the half hour point. Right? The setup could be in the first hour, the half hour, or the next hour, or at what we call the quarter hours. Quarter hours would be like 10:45, 11:45, 12:45, 10:15, 11:15, 12:15. There's hours, there's quarter hours, and there's half hours, right? Your 15s and your 45s. So a lot of these times are where things can move around. So that's the 15-minute chart. That's real quick, just to answer what my favorite times are. Those are my 3 favorite times. Every trader has their favorite times. I know 10 p.m., 11 p.m. Those are some popular times too. All right, next slide. Next slide is the same chart. Next slide is going to be the exact same chart, but it's going to be with 5-minute candles. It's the exact same chart, but it's with 5-minute candles. So you can see from here, 11 a.m. down to here. This same chart, 11 a.m. down to 0. Right? First chart, 11 a.m. down to 0. We're on 15-minute candles. Second chart, 11 a.m. down to 0. But on this chart, we're on 5-minute candles. Okay? We're going to see a little bit more. We're going to see it's going to look a little bit. It's going to start to look a little bit more clear here between the two charts. And these two charts you kind of want to study. You want to kind of notice the difference between these two, naturally. That's why I put this chart. I put this, remember, in the what's it called, the Pip Talk channel. These are the exact same two charts, but we can see more candlesticks on the 5-minute. We can see more price. This is going to show us that the setup's not going to necessarily happen right on the hour. It can start a little bit before the hour, or sometimes even a little bit past the hour. But it's usually after the hour. It's usually after the hour that's very relevant to see that shift in the market. So if we look, we're going to look at the next slide real quick. Let's go to it. There it is. So we're going to look at that first 11 a.m. hour. You can see now, like if you look at the first 11 a.m., it was just one big candle. And then, yeah, you see the price shift, right? On the 15-minute chart, we have that one big candle and then the shift. 5-minute shows us a couple candles coming down. Notice how it's 3 candles, right, that come down. What was before 11 o'clock? 10:45. 10:45 was before 11 o'clock. What did I just say is also relevant? Quarters are relevant. Half hours are relevant. So 10 o'clock, 10:15, 10:30, 10:45, 11 o'clock. Right? You can see before 11 o'clock, you can kind of see it. There's 3 candles before 11 o'clock. Those 3 candles are that big fat candle. Right? Because what you got to understand with this, and I don't want to get too advanced today, and then there's a lot of new people, is every 5 minutes there's a new 5-minute candle. Every 15 minutes there's a new 15-minute candle. Every 30 minutes there's a new 30-minute candle printed on the chart. Every hour there's a new hour candle printed on the chart, right? So one thing to try to understand about this is that there's candles printed every 5, 15, 30, 45 an hour. Every 5 minutes a 5-minute candle's printed, right? But coming into 8 o'clock, if you have something that looks like it's setting up on the 5-minute time frame, right? Coming into 8 o'clock, that could be synchronizing with a new hourly candle that's making a shift, or like a 15-minute. It's hard to. I have an understanding of that in my brain. I'll one day kind of put onto paper here like this, but I don't want to get too much into that. We'll save that for another lesson. But you can see there's 3 candles before 11 o'clock, and then after. Look at the shift. Look at the shift. Look at that price shift. Right. So your setups can be around hours. You can base your trades around hours, right, and half hours. I'll do half hours in another lesson. We'll look at half hours and how that could be relevant. But hours are more concrete. They're more structured. I would say the hours are the most accurate. If we're going to look at half hours or quarter hours, hours are way more accurate. And obviously, anything that's more accurate than something else requires more patience. Right? Anything that's more accurate than something else. There's other ways to look at this to give us more frequency, but you want the most accuracy you can. And anything that has accuracy does require patience. Believe me. If you look at the Instagram page, I just posted a picture. I don't know if you guys saw that, if you guys are following it. I just posted, I'm going to be posting nuggets like this every day, 1 to 2 times a day, at least. I wrote, trading is 10% buying, 10% selling, 80% waiting. It's true. You got to learn to sit on your hands at times. You got to learn to wait. You get paid to wait, right? Sometimes the best trade is no trade. And your goal in the market isn't just to win and make money and try to find winning trades. It's also to avoid losing, right? And we got to learn that psychology. This is why over the past week I've been trying to really bring that psychology to you guys, because there's one thing you guys might not have, and it's just experience. That's all. The information's here. You guys are getting the information, but there's one thing I have that maybe a lot of you guys don't, and it's just experience. So that's why I talk like this. When I talk like this, it's my experience talking. That's the one thing you guys got to take away from deeply is experience. Because that's the one thing. Information's there, but experience is, you need to experience to go through that. And a lot of times when I talk like this or talk about the experience, or I guess say preach, is because in my experience, I had to go through some bad stuff. I had to learn the hard way to go through some of the stuff I teach you guys and talk about, right? That comes from experience. So that trading, 10% buying, it's waiting. This just means it's like I said, more psychological than it is actually physical in a sense. It is a lot of psychology towards trading and, characteristics. That's what this means. That's what this picture means. It doesn't actually really mean 10% buying. It means it's more psychological than it is actually, in a way, physical, or how we may think it is, right? Make sure you follow the page. I'm going to be doing some giveaways. I'm going to do a giveaway soon. It's going to be a good one. It's going to be, I don't want to say it right now, but I got a great idea. It's going to be interactive. It's going to be good. Anyway. So 11 o'clock. I'm just going to grab one of these little. Doesn't mean we have to take the trade rate at 11 o'clock, but we know because things can look a certain way coming into the hour, right? If we look at the 12 o'clock hour, which we've looked at a few times already, look at how the market was on the 5-minute. So if we go back, let's go back real quick to this. Look at on the 15-minute, solid candles, solid candles, solid candles, past 12 shift. 5-minute, still some pretty solid candles. One more candle past 12, and then you get your first rejection candlestick. This is why I've been teaching you guys about the rejection candles, or teach you guys a little bit about candlestick closing, right? Candlesticks on different time frames, right? Coming into that hour, you can see how the market makes a shift and goes down. Next hour is here. See, this is what I mean. If you look at the first chart, so look at this hour right here. The 13. So we're looking at the 12 down to 13. 1, 2, 3, 4. Guess what time this blue candle is? That's the 12:15 candle. That's starting to open. Now, if we look at this area on a 15-minute, it's this big candle that comes down, and past that it starts to make a shift. This is why I take 7-minute trades. What's 7 times 2 basically? If you have to roll over, it's pretty much 15. This is part of why I take 7-minute trades. There's a reason why I take 7-minute trades. And it's a timely manner. It's a timely component. If you look at the 15-minute, because 15-minute candles will go, if a 15-minute goes 1 o'clock, the next one's 1:15, 1:30, 1:45, and so on, 2 o'clock. So if you look at the 5-minute, coming into that hour, the market was going down, but even past it, right? And then further on, you get that shift past the hour. The 15-minute candle was this, 1, 2, 3. The next 15-minute candle started to go up. It's not always going to be right on the hour. See, the 5-minute, like this one, right on the hour, it shifts. This one, a little bit after the hour. But this one, you can see a little bit after the hour, like, a good amount after the hour. About 10, 15 minutes after the hour would have been when to buy. This hour, nothing. You can see this hour here. That would have been this red one up here at the top. Right? Coming into that hour, you can see past the hour. Right? Past the hour, right? That's why I drew it like this, because it's past that hour. This white line, let's say, represents the hour. Past the hour, we know the market's going to make that move. Right? For example, coming into 11, after 11, the market was higher. Coming into 12, after 12, the market was lower. Coming into 1, after 1, the market was higher. Coming into 2 up here, I think this is 2. No, this is 3. Coming into 3, after 3, the market was higher. Almost here, a little bit of bullish reaction, but then no, keeps going down. After this hour, the market was higher, right? After the market's higher, see? So hours are very relevant, guys. It's one thing to start studying, one thing to... Oh, this is just... No, this is the same slide, just 2 of it. And a lot of times, so... This goes a little step further, but a lot of times these hours can be overbought or oversold. So this is where we can kind of combine an indicator with this, like your stochastic or your RSI, right? Any indicator that kind of gives us that overbought or oversold market reading. A lot of times coming into the hour, the market's going to be overbought or oversold. So this is kind of like another extra confirmation to pay attention to. So this is the same chart on the 5-minute now. It's the same chart, but now we have a stochastic down at the bottom. So on some of these hours, you can see how the market was relatively overbought or oversold. That's one thing that happens a lot as well. That's kind of an extra kind of thing to tie in with this. If the market's overbought or oversold coming into the hour, that's another kind of good confirmation, another thing that just adds on top of this. We can just see without looking at the indicator, right? This is why I saved the indicator for the end. We could just see without even looking at the indicator, right? That, around the hours, this is a regular occurrence. It happens often. So with the indicator, it's something we can kind of tie in to say, okay, it's also overbought in the hour. It's also oversold. That's another type of confirmation, kind of just to tie in with this. So some of these hours you can see are oversold or even at the overbought stage. Not all of them, but the majority of them are showing signs of overbought or oversold before the hour or even on the hour, like right here. We see the market's oversold around that hour. Same thing relatively here, kind of, not so quite. Not every single one, but this is just kind of to show you how we can add something on top of this. And like I said, as far as my strategy goes, the strategy that I use and trade with, I use indicators with my strategy. So a lot of times with my strategy, I'm noticing this is happening. But it doesn't need to be an indicator-based strategy. This is like what we went through tonight is time and price. Indicators is just kind of like an extra thing to kind of tie on top of that as well. Or anything realistically, right? Is there any indicator that marks the hours? I'm not sure. No, I'm not too sure. Usually when you're trading, you could see that, but no. I usually what I would pretty much do is say, to kind of study this, I would take a day. Like if we look at, let me just put Sunday away. So that this is like last week right here. Let me see. Where's last week? Okay, here's Friday. If I were to study this, I would say, okay, that's Friday. Market close. There's the 8th. You could find the dates. So there's, Friday. You could find the dates at the bottom, like May 8th to May 7th. May 7th to May 6th. So see how I have a couple days. Let me mark May 6th to May 5th. So there we go. I just sectioned a couple days of the chart. See that? Those are days. This is Friday, Thursday, Wednesday, Tuesday of last week. This is kind of an effective way to study the chart, is breaking down your weeks. I used to do this a lot of times when I was trying to understand stuff, understand how frequent stuff may be. I would break down a week. I would basically break down the chart into like a week. I would find Monday on the chart, Sunday, Monday, Tuesday, or mainly I would find Monday, Tuesday, Wednesday, Thursday to Friday. So here I can pretty much study, May 4th to May 5th. I have that kind of boundary marked out, and I can look at the hours now. I can look and see the hours and how relative something is to that hour. Now, if you do your analysis on a 3-minute time frame, that doesn't mean your chart. The analysis and time frame does not dictate how long the trade should be. No. You can take a 15-minute trade based off a 3-minute time frame analysis. No, it doesn't. There's going to be a little bit to understand how we use the time frames together, but no. If you're using a 5-minute for your analysis, you could take a 10-minute trade off of a 5-minute analysis, like the 5-minute time frame analysis. You could take a 15-minute trade off of a 5-minute time frames analysis. You could take a 7-minute trade, and I do a lot. I take a lot of 7-minute trades off of a 5-minute or 15-minute analysis. I said that backwards. You could take a 7-minute trade off of a 5-minute analysis. I said that a little backwards there. How did I set up the line? So look, this is how I do the line. So look, let's say right now in the chart we're looking at last week. We can see the dates at the bottom. So if we go here, we have the vertical line. I place the lines myself. So I'm just going to put a line on, see the 10th? Let's just say there's the 10th, May 10th. Now that's the weekend, right? That was the weekend. That's why sometimes you might see it skips 2 days. That's because it's skipping from Friday to Sunday. So there's the 8th. So let me mark the 7th. So this is kind of like, let's just say this is the boundary I want to study in. I have May 7th to May 8th. I have a full day there. There's 24 hours in that day, right? So I have the first hour. My second hour is here. It might be tight. There's my first hour right there. I can make the lines a bit thinner. See, if I click on the line, if I click on this line, this little box is going to appear. See this little box? If I click that line, this little box is going to appear, and I can make the line thinner if I want. I make it thinner. There we go. There's my first line. 2 o'clock. It's right there. Now, if you zoom in, the closer you zoom in, the farther they're spread apart from each other. So I can just zoom out. You can see. There we go. So now, 3 o'clock, there's another hour. So these are hours. So I have 1 hour, 2 hour, 3 hour. And let's see, any shifts? Do we see any shifts? Do we see any relative shifts on these hours? Well, I can actually, right here, if we look, we see kind of candlesticks coming down, 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 down. We see a price shift. See that nice shift in price there? This was going up. And look how it kind of pulled. It's kind of interesting how it pulls back and boom, it's gone. On the hour, after the hour, it's gone there. See that? This hour, we see a strong reversal. See that strong reversal on that hour? So we can see relative movement coming off of the hour. I call it momentum. We can see momentum coming off of some of these hour points. And we have another hour right here. Look at this. Boom. Look at that. We're coming down for a full hour. We're coming down, 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 down. We hit 3 o'clock in the morning. 1, 2, 3 candles goes up till 3:15. See how that goes up straight till 3:15? Straight until 3:15, that just goes right up. And 3:15 reverses. What's 3:15 though? That's a quarter, right? That's a new 15-minute candle. 3:15 reverses until 3:30. 3:30 continues. So we could keep marking the next hour would be 4 o'clock. Look what 4 o'clock done. Look what 4 o'clock did on a 5-minute. These could be overbought, oversold, but look at from 345's here. So from 345 to 4 o'clock, that's a 15-minute candle there. 345 till 4 o'clock, that's a 15-minute candle. 4 o'clock till 4:15, right? Perfect 15-minute trade right there. 4:30. Oh, sorry, I marked 4:30. I meant to mark 5 o'clock. All right, half hours can be messy. I would say nothing really at 5 o'clock. It looked like it was starting to go down. 6 o'clock. And then you could just keep marking it, kind of just to study, right? This is like how you would want to kind of study it. Just get an idea of this, because you're going to see the hours move. You're going to see this so much. The more you study this, you're going to see the hours move. Price moves at hours a lot. How do I do that? That's the background, so my background's clear. So what you do is you go to settings. Someone asked in the chat. You like right click or double click on here, and you go settings. And when you're on chart settings, appearance, the background has to be the same. So you can make the background every color the same. So you can kind of see how the first three, mine are all the same color. It's like this light gray, almost like a white, but a little bit of a gray to it. So like if I make, let's see, let me just show you. I'll make it a bit darker. But see, I made all three the same color. So it's clear. I could make, I could make it all white, but I don't know. I like to use a little bit darker because white's too bright. So I like to use like these types of colors. Something that's a little bit like this. Not so dark. Or not so bright. Still a little bright, but the candles are pretty clear. I mean, it's not so bright. So that makes the background nice and clear. If you go symbols where your candlesticks are. So I like to make my borders. My candlesticks are blue and black. I like to make the borders a darker gray color. So it kind of like sharpens the candlesticks and makes them stand out. But yeah, guys, other than that, that's tonight's lesson. I wanted to make it quick and straight to the point so that if you watch the recording, it's just straight to the point. It's not me talking for like 2-3 hours, because some of our trainings are like that, where we're going from topic to topic. So I'm going to wrap this up in about a minute or two. I hope you guys got some value tonight and enjoyed tonight's lesson. And that was just me wanting to show you guys again how price and time, or I would say time, is very relative to the market. What's my thoughts on BTC's drop? It makes sense because the market is half doing the halving. Like there's the BTC halvings going on. So Bitcoin halving, that's going on. That's not the website. But is this the website I'm looking for? No. That's a funny plan. I've never seen it. So I mean, it makes sense, especially with what's happening tomorrow. They changed the website. Oh, here it is. So the Bitcoin block reward halving countdown is 22 hours away, 9 minutes. What is the event? A part of Bitcoin's coin, and you should just go on this whole site and read it all. So Bitcoin, I'm not a Bitcoin expert, so I mean, as far as information goes, what I understand is right here. Every 4 years this happens. So every 4 years, the block reward halves itself, and will keep halving until the block reward per block becomes 0. So the miners are rewarded. As of now, the reward is 12.5 coins per block and will decrease to 6.5 coins per block post halving. Why was this done? Makes sense that it's kind of happening before this. This is literally happening 22 hours from now. It happens every 4 years. So this was the first halving that happened. Halving. After that bullish run, second one. So this happens every 4 years. There's been, I think, 3. No, that was the first one. Sorry, I thought there was 3 by now. I thought there was 3. Is this the third? This is the first one. Then bullish run. Second one, bullish run. And we're about to go into the third one very, very soon. So it's a good time to buy Bitcoin right now or buy crypto, or it's a good time to be holding. It's a good year or two to be holding cryptocurrency because we're probably going to get a bullish run this year. Every 4 years this happens, and every 4 years it happens. This is a weekly chart, so these are weeks. These are all weeks. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. These are all weeks, right? This is a weekly chart. Much, much longer term chart. So if we actually look at the bottom of it, you can see 2012, 2013. When did Bitcoin come out? 2008? 2008, 2010, I think. Yeah, so first one. So from the 2008, 2012, there was a bullish run. But then this was when the first one happened. It happens every 4 years. So if you look at the bottom, you can see dates. You can see literally, we're actually looking at years, 12 to 13, 14, 15, 16. So that was the first one. And you can see how the market, until the second one continued. Even in the midst of that, it had its, its drop. So that's kind of why I think it's happening, because it's this event's happening. So I think that's why. Because miners are rewarded. So imagine if you're rewarded when Bitcoin's lower. Would you rather be rewarded at Bitcoin being higher? Your Bitcoin's lower, so you get more ROI. ROI. I don't know. That's kind of what I see. Ethereum, LTC, XL. I like, I'm not gonna say what to buy, but Ethereum's great. I got Ethereum in my portfolio. LTC, XLM, XRP, Bitcoin. XLM, I would look into XLM. XLM, that's Stellar Lumens. Stellar. XLM. XLM is Stellar. LTC, Ethereum, XRP, and of course Bitcoin. Like I've always told you guys, I don't care what Bitcoin's going to do next month. I care about what Bitcoin's going to do 5 years from now. Or 3, 4, 5 years from now, 10 years from now, right? Don't worry about what it's going to do next month. You got to be worried 10 years from now. But yeah, miners are getting rewarded. And this will happen. This will finish by the year 2140. I won't be alive by then, but damn. Damn. It's called bitcoinblockhalf.com. But yeah, guys, I'm out for the night. Like I said, just kind of wanted to get straight to the point with this lesson. I was telling you guys in December to get XLM. I think December we were talking about XLM. I hope some of you guys listened to me because you would have doubled up. If you got XLM, December and January, I was telling you guys about XLM. XLM would have been a good one. That one doubled almost, right? That's a good coin. You get good quantity, but that went from like 3 cents to about 8 cents. It was here. I was telling everybody about it here. That's where I started talking about this one, and then once again down here. Let's check something out real quick. That would be tonight. That's 12 a.m. Eastern Time Monday. That's tonight.